Well, hello everybody, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. We ask ourselves each day what happened today and what might it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. You can subscribe anytime content's pushed, you're notified. As far as these markets, we got a notification today, and that notification is these markets still don't want to break down. Industrials led the way up 2.25. Big piece of that was the McDonald's news of the CEO retiring, and then also the Boeing earnings. That added a lot to that. And after the bell, Visa actually is helping. I think Visa's in the Dow now. It changes more regularly than your oil anymore, but big numbers. S&P got a decent lift all across the board, 1% up across the board, 1.25% in the other two. Gold got whacked, $26. Silver got hammered, down 6%. We had the UNL make new lows, all-time lows, I believe, 3.5% lower. Oil flipped around, was up, and the dollar was just about flat. If we take a look at these markets and we take to see exactly what's happening, we have more confusion. And I was thinking about this today more so, especially with it holding one more time down here at the lows. And I've been focused the last, I guess it's a week now at least, on this bar right here. And let me draw it in for you again. It's a December 18th bar. This was the Fed bar, and then the follow through the bar the next day, that was when we saw the nice big push up off. This was short covering, this was continuation. And so I've followed this bar for quite a while now and been using it as kind of the gauge. If we could break above, I would think that we're going to certainly test the highs and probably go to new ones. We got up there, tested, couldn't do it. Tried again, couldn't do it. Both times, big sell-offs, right? Each time it's come down, and I don't keep moving averages, but I know there's like a moving average in here somewhere, right? And this keeps bouncing off that moving average. A lot of folks talk about the moving averages, and so even though that's important to many, I think what happens is if enough people follow it, then it becomes important. What really matters is whether people show up and put more money on something or not, whether they should or shouldn't. If we look at the way this traded today, it actually traded down here with volume again. In other words, if I look at the volume, 41 million, or it's actually more than that. I divided by 10, so it's about 4.1 billion. And if you look at it compared, it's 40.6. If you look at these lows, they were 40. If you go back into the bar that was the big short covering bar, is 49. So we're attacking this area. We're attacking it with volume. We haven't given it up. Each time down here, you're using up some more of the firepower, in terms of buyers. It's a support zone. It keeps holding, and it keeps popping us back around. And today, we get back inside this bar. 2018.98, we're closed at like 2021, I think. Yeah, 2021.25. So we're back inside of it again. Now if we flip around tomorrow and head right back down, that's going to be very negative in my opinion. But right now, these huge, volatile, wide price spread bars continue. Today's range looks like about 30, 90 is about 35 points. Normally these ranges 15, 20 points. Now we're doing 35, and we've been doing that for a while. Going back to what I was talking about earlier, I'm starting to think that, even though I know this bar is important, that's why we keep oscillating around it. I'm starting to think that the critical zone now really is this whole area. And the reason I say that is because that's where all the trading has been. You've had a little bit above it, below it, a little bit above it, but mostly it's in this range. And so if I look at that range, now we're looking at a 1992 to 2062. We're looking at a 70-point range. That's where all the action is. And there is a lot of action in here. Even though we're going nowhere, we're going up and down a lot. And if you're not careful, you're getting thrashed around pretty bad. But that's, in my opinion now, this has defined the range. And the next break of this range is probably going to lead to a range that's essentially the same size, right? One way or the other, top or bottom. So I'm focused on this range. Everything in between it now, to me, is just kind of noise. Even though it's a 70-point range, gets down to the bottom. If you want to buy it, that's where you take your least risk, right? It gets to the top, you want to sell it, that's where you take your least risk. That's the range, that's what they're trading right now. I want to back up, and it's going to look the same on all these, so it's not any different. And after the bell, you actually had Amazon, and I think Google actually ended up reversing, even though they missed numbers, which is going to help the NDX some tomorrow. But I want to focus a little bit here tonight, one more time, on this structure I talk about. I've caught a lot of flack in various articles I've written that there is no structure to the market, right? But there is. There really is a structure. And that structure is important because even here you can see I just talked about this larger range. Anyone that's trading, let's think about it in different terms. Let's throw the range in here again, right, and just kind of lay it out. Kind of got this top up here, and kind of got this bottom down here. Anyone that's buying, say, these lows, or anywhere, like today it gets a big spurt up. Maybe it's going to gap up tomorrow. If it does, anybody that's buying in that area, that's their price point. What's the risk? The risk is a trade below here that keeps going. If you're shorting it, and you're shorting because you got excited and you shorted it here, or maybe you shorted it yesterday, and now it flips around, and if it breaks out this way, you're going to be forced to cover. In other words, what I'm trying to say is this is where all the stops are going to be located. On the bottom side, they're all going to be down here, right? And stops are what moves markets fast. In other words, once they trigger, if there's enough of them, and the longer you build out a range, the more collect. We're 6-7 weeks into this range. Usually 6-7 weeks is about what you expect. You can sometimes get 8 or 9 before you break ranges. But that is building up on both sides. And so last night I talked about the idea that the structure of the market is such that when significant numbers, and by significant I mean either on a single time frame or multiple time frames, especially multiple time frames, when they set up, that structure allows larger moves one way or the other. And when I say when they set up, you really want them to set up fairly close, fairly congruent. And so in this case, this one's 62, that's 92, that's 30 points between these. That's quite a ways. This one actually has about 20 points between them. Even that's a little bit farther. What's important, though, is if you look over here at the weekly, the last high that was made, and let's get the exact numbers here. So this one's going to be this bar. To get a weekly swing point high, you have to print 6 bars more without making a higher high. You got 4. So if you go 2 more weeks and then break to the top side, right, then you would actually have a break on this swing point high to the top side, and you'd have a break on that swing point high to the top side. That can give you more juice to the, to that direction. Now, if you go the other way, this low, count 6 bars out, that's this week. If this low does not get tested tomorrow, and the low is 1972.56. If that low does not get tested tomorrow, then you're going to have a swing point low printing at that price point. And what that means to me is that increases the risk that a break of that low, and in this particular case you're going to have 2 of them because you have that one and this one, and then you have the others on the weekly time frame. And if you get that situation, right, the weekly, if you get that situation and they break, the odds of a faster move to the downside increase. And I suspect it would take you back down into about the size of this bar. And matter of fact, and I'm going to pull this up a little bit, if we were to take this range that we were just talking about, that range, and project it lower, what does it do? It takes you right to about the top of that big bar. That's where all the volume sits. That was the October low. So a break to the downside is probably going to get you a fast move down into this area. And if there's multiple swing points, that's the structure that I talk about that can set up that sort of a large move and a fast move. So, when I'm talking about this level, and let me pull the daily back up, when I'm talking about this level, I'm not talking about, 2,000. I'm talking about, these 2 swing points not breaking this week. And this one in particular not breaking, and that's at 1972.56. Well, not breaking, but not even being tested, because if you test it, then no longer do you have, no longer would you have the case where this is the lowest low for 6 bars. As long as it holds up that way, and right now, given the rally back tonight, you'd have to have a heck of a sell-off tomorrow to break that 50 points. I don't think it's going to get down there tomorrow, so more than likely that's going to print on the weekly now as a swing point low. Now, if you can just imagine, a scenario where, and I'll just kind of draw it, freehand here. If you can imagine a scenario where stocks trade in this area, right, for the next even 3 or 4 days, assuming that these, there's 2 ways it can happen, right? It can get down here and just break them both at once. Or it can break one and then follow through and break the other, which breaks the swing point low on the weekly as well. Either of those scenarios should lead to a faster move to the downside. And it should last 2 to 3 bars. I always say should. And the reason I say should is that's what the probabilities expect. In the market, as we know, not everything does what it should do. If it doesn't, then it's telling us that the signal is a false signal and that there's more strength in the market than we expect were this case to occur and you not see that fast follow through. We'll tackle that if we ever get to it, because this market, continues to be a market where the support seems to always come in just where it has to. And just where it has to is typically what you would see in a bull market, because that's where the least risk is. Matter of fact, today, I specifically told folks in the TNT room, the teach and trade room that I run for subscribers, right at the bottom this morning, that this is where the buyer should come in. Right? Here's the test. This is where the buyer should come in. This is where it should hold. And if it doesn't, it's going to get really ugly. Sure enough, it held. They flip around. They put the reversal on. They take it all the way back up. You can see where money should come in. It's when it doesn't come in right? Or where it should come into the downside, the sellers, and they don't come in, right? That's when the market's telling you something. If it does what it should, it's simply telling it's behaving, and right now it's still behaving. There's going to come a point where one side or the other is going to lose, right? That's when you get the larger moves. Because right now, it's a game of chess, right? Should I buy? Should I sell? Nobody knows. They haven't known for a while, and you get these big volatile swings back and forth as a result of it. So, hopefully that's clear. That's the structure I'm talking about. That structure, if we break to the downside next week, the week after, 2 weeks from now, whenever, those two swing point lows are going to be setting up down there. And if we go even longer, more and more stops will accumulate, and that whole scenario will get stronger whichever way it breaks. The NDX and the NASDAQ composite are both, and I'll use the NASDAQ composite, they're both set up even more so that way, because here there's a lot of stops sitting down here because these are congruent. They're right together, folks. I mean, we're talking like 5 points on something that moves 40 or 50, right? That kind of a scenario, you're going to have a lot of stops accumulated down here at this point. This is from the 15th of December, and we're at the end of January. We're talking 6-7 weeks already, and I don't know how much longer it's going to take it to get down here and try to break it if it is, but whenever it does, there's a lot of stops down here. If this breaks, this is the one that's going to take everything else with it, because it too has a swing point low that's going to print this week, tomorrow, at this level. So hopefully that's clear. That's the risk. That's the structure I'm talking about. And you can't get a market collapse. You can't even get a market downturn of significance until you get those breaks on multiple time frames. Now, if you ever get to the point, and I don't know if we ever will, the way this market trades, right? Because it's been propped up for so long. But if we ever get to the case where this sets up a break, and if we go over to the monthly now, I want to show you something I haven't talked about yet, but I'll just share it with you now. If we come, with 3 months in, we could get a retrace back here over the next 3 months. But assuming we don't test this over the next 3 months, what's that going to do? That's going to print a swing point low on this bar. And what does that also portend? That means you have 2 swing point lows that are going to be fairly close in terms of monthlies. Going back now to the daily chart, if I come back here and I say, okay, and that price point, by the way, if we go back to it, 41.61, 39.61. Okay, now let's go back to the weekly. 41.61, of course, is the 41 number. Let me see, what is that number? 41.16. This 41.16 number, so it's 50 points away between the two on the monthly. 41.16, 39.46, right? These two areas, let's go back to the scenario where this breaks up here. And let's just kind of draw this out even farther. Let's talk 6 months from now. Assume that this breaks multiple time frames. Now you come back and maybe you get to the top of the hammer bar. And now you do some sideways stuff up here for the next, I don't know, 2-3 months. And then you break down and you get close to this guy, and you got your other swing point low down here somewhere at, it's a little bit lower than this. It's down in this area. And it breaks them both. That's on the weekly, and it would be on the monthly as well, right? That's when you can get fast crashes, right? That's where the crash scenario can come in. You can't crash unless there's something, way up. right? That's the kind of scenario where you can build up, and it takes a while, but you can build up a scenario where you come down. You know, you're going to get bounces in between. We're talking monthly charts now, right? But that's when you can get a huge drawdown. And we're talking 20, 30, 40%. We're a long way away from that even trying to set up, but it all starts here. It all starts on the short-term time frame. You know, it doesn't start on the long-term time frame. It starts on the short, moves to the intermediate, and eventually affects the long. And so we're talking, you know, if I just take you back in history and you think about September highs in 2007, market crashes in 2008 September, took a year. Crashes don't happen immediately. They take time. Now your all-time highs are going to be sometime earlier. It can be anywhere from, you know, 3, 4, 5, 6 months. It can be, you know, a year, year and a half. But it takes time. They don't happen overnight. It's not like it just out of nowhere, right? That's not the way it takes place. Everybody likes to think that, but that's not the way it happens. Could we already have a top in this market? Sure. I mean, maybe we already do. But we don't know that. We won't know that for some time to come. What we do know is that there is a structure setting up that could cause problems. Now, take the flip side of it. You got a structure on the flip side to make it run too. You know, when I was talking about, and I'm going to draw this in, when I was talking about this range, if we just take this whole range here, you know, you've got swing point highs. That one's already been over, but you have 2 of them up here, right? And if this one prints as a high, you're going to have 3. So you can get a fast move up here because there's going to be stops up there as well. And so we're in a period now where the market's trying to decide. I was telling last night that I didn't see catalyst, right? Where's the next catalyst going to come from? Maybe it was here last night I was talking about it, or maybe it was in the, I know I wrote about it this morning. And I can't find a catalyst. The biggest catalyst you have right now is QE in Europe that's just been unleashed. And that's not a small catalyst. I mean, it's a big one, because that's going to support the European markets for some time. And by proxy, will support us as well. But then I thought about it today, and it's like, you know, there is another catalyst, and that is that where the heck is anybody going to put their money? It's not like you can go buy bonds. It's not like there's huge money to be made in real estate at this point. I mean, most of those, you know, easy money's already been done there. Where are you going to put it? Now, maybe you want to shift it into overseas markets since the dollar's so strong. But the equity markets is still where people put their money. They got no place else to put it. You know, so by default, you know, there's support, shall I say it that way, coming into these markets. Okay, let me pull back here and go back to you know, what else happened today. I just, you know, I saw confusion with some of the comments, and so I wanted to try to tackle that and hopefully give both sides of the story. This thing is not out of the woods either way. It can still break higher, it can still break lower. When you break lower, you break faster. That's why you always protect the downside, right? Because the downside comes, and when it finally sets up, it's fast and it's furious. The upside, yeah, you can get burst, but they're going to crawl most of the time. And so it's a very different scenario trading the upside downside. Let's quickly look at these others, see what they look like. So the Russell, they all look the same basically. Let me look at the sectors real quick, see if there's anything special there. Remember last night we were seeing some wide price spread and volume. I saw Biogen after the bell up fairly large, so I suspect the IBB is going to get a nice push tomorrow. It went under, back over, less volume, so that's going to probably get a push. I saw the ITB shot up today, and that one's just going to die here as it comes into this area, I suspect. IYT, and under over, but more volume. I don't see anything. I'm looking for things outside. The IBB looked pretty good. The SOX here, that looks pretty good. That can get a bounce tomorrow. Let's see, XLB. That one had more volume. I don't see that as being good. XLE, that one can get a bounce. And I saw the oil reverse today. XLF also can get a bounce. Now the XLF, that was a good test. So that low, 2306, 2308, did not quite test the volume low. But certainly didn't have the volume today. So not the best of things, but not bad. This isn't, if this market does roll, folks, these are in danger of ABCD structures. I'm sure you see it, but I'll just, draw it in real quick. Well, get the right tool so I can draw. From here to there, back up, right? That's an ABCD structure to downside. And this is an important sector. And we know these earnings got sold. Are they gonna break or not? So far, they haven't tested the low. They came down there, didn't have any volume today. Looks like they will bounce or attempt to bounce some more tomorrow. Remember, tomorrow you also have the GDP, advanced fourth quarter GDP numbers. That's going to be kind of a big number. XLI, that's about the same volume. That's okay, nothing special. XLK, that one actually had volume, but not as much. Now look at this one. This one tested 3 swing point lows, held, pushed a lot of volume. That to me suggests it is going to try again. I don't know that it's tomorrow, but it is going to try again. XLP, too much volume. The sectors are not suggesting, and here's the utilities, the safety play going higher, and too much volume on the XLV and the XLY. Yeah, the sectors aren't showing it. And if we look at the OX markets, overseas markets still, most of them hanging towards the highs, so nothing really to look at there. We saw gold take a nice plunge today, down 26 bucks, as I told you at the front. Let me see, gold, let's grab gold. And that one's just coming back in. 120.34 is the low it's trying to test. It got to 26 today, didn't have the volume. It looks like gold might get a bounce, but I saw silver was down big. Let's see, so silver, volume pushes 2. Yeah, I don't know. Silver doesn't look good at all. That's kind of an ugly give up, 5%. Bonds still won't come down. And dollar still won't come down. So, I don't see much different there. That, to me, is still saying, hey, there's problems. And I did see oil reverse and do an under-over. It's not an extended move now because you congested for a while. So it's just an under-over. Maybe it can bounce a little bit tomorrow. In a nutshell, huge ranges, a lot of volatility. I still think the danger to the downside is what people ought to be thinking about here. This market may fool me and may just simply go straight back up again. I'm not going to say that I'm smart enough to know that. I am smart enough to know where the danger is. The dangers to the downside, I suspect next week is going to be just as rocky as this one was. And if we get a reversal to the downside, and if those stops start to fire, it's going to be a fast move to the downside. So, whether you protect in front of it or you pay close attention to it and protect on that break if it happens, one way or the other, that's what I'd be, definitely have on my radar gun. And, if the market wants to work higher, then so be it. Until next time, I thank you for joining me. Tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have a great night. Take care. See you next time.